Here's a summary of Vertiv's 2026 Q1 earnings call, designed for clear and concise delivery. Introduction. Good morning, everyone. We're here today to discuss Vertiv's strong first quarter 2026 performance and our raised outlook for the full year. We have our Executive Chairman, Dave Cote, CEO, Gio Albertazzi, and CFO, Craig Chamberlain joining us. Please remember that our forward-looking statements are subject to risks and uncertainties, and detailed information can be found in our SEC filings. We will also be referencing both GAAP and non-GAAP financial measures. Executive Chairman's remarks. Dave Cote expressed strong satisfaction with the start to the year, highlighting robust business momentum. He noted an increased customer urgency, larger scale deployments, and growing technical complexity as key drivers. Cote emphasized that Vertiv's ability to solve these complex challenges positions them favorably, with broad-based demand and compounding competitive advantages, especially in the early stages of AI infrastructure build-out. He acknowledged challenges like tariffs and supply chain complexities, but stated they are manageable and, in fact, raised the bar for established players like Vertiv. He concluded by expressing confidence in a strong year ahead and beyond, crediting Gio and the team's excellent execution. CEO's remarks. Gio Albertazzi provided a detailed overview of the Q1 2026 results. Key financial metrics. Revenue. Organic sales grew by an impressive 23% year-over-year, with total sales up 30% including M&A and FX. Regional performance. Americas led the growth with 44% organic sales increase. APAC saw 12% organic growth, while EMEA experienced a 29% organic decline. Encouraging signs for EMEA's recovery are emerging. Profitability. Adjusted operating margin reached 20.8%, up 430 basis points year-over-year and exceeding guidance by 180 basis points. Adjusted operating profit surged 64% to $551 million. Earnings per share. Adjusted diluted EPS was $1.17, an 83% increase from Q1 2025 and 19 cents above guidance. Cash flow. Adjusted free cash flow was strong at $653 million, up $147 million, driven by higher operating profit and working capital improvements. Market environment and outlook. Pipeline momentum. Vertiv continues to see strong pipeline momentum and expects robust order performance for the full year 2026, with orders anticipated to be up year-over-year. Regional focus. Americas remains remarkably strong and broad-based. EMEA is showing improving sentiment and strong Q1 bookings, with a projected return to year-over-year sales growth in the second half. APAC, particularly rest of Asia and India, shows strong pipelines, with China also demonstrating encouraging movement. Pricing. Favorable pricing dynamics are expected to continue, with positive price/cost expected for the full year, even factoring in tariffs. Manufacturing and supply chain. Vertiv is accelerating strategic capacity investments to meet demand, expanding its global footprint, and leveraging the Vertiv operating system for productivity gains. They are maintaining supply chain resilience through regionalization and multi-sourcing, proactively managing commodities and components, and mitigating tariff exposures. Strategic investments. Significant investments are being made in capacity expansion across manufacturing and services to support customer demand and bolster operational resiliency. Acquisitions, like that of a fluid management company, are strengthening liquid cooling capabilities. Investments in engineering labs and customer witness test capabilities are also a priority. Full year 2026 guidance raised. Adjusted diluted EPS raised to $6.35, a 51% increase from 2025. Adjusted operating profit raised to $3.2 billion, a 53% increase from 2025. Adjusted operating margin, expected to be 23.3%, up 190 basis points from 2025. Net sales, updated to $13.75 billion at the midpoint, reflecting 34% growth. Adjusted free cash flow, guidance maintained at $2.2 billion. Key highlights: strong organic sales. Growth in Q1. Significant expansion in adjusted operating margin and profit. Exceeding EPS guidance. Robust free cash flow generation. Raised full-year financial outlook. Strategic acquisitions strengthening capabilities in thermal management and structural fabrication. Successful customer projects and partnerships, like with EcoData Center and C-Power Energy. Achieving investment-grade credit ratings and inclusion in the S&P 500. Lowlights, or areas of focus: EMEA saw a significant organic sales decline in Q1, though this is viewed as temporary with a projected recovery in the second half. Capacity investments and bringing on new capacity can lead to some sequential margin headwinds between Q1 and Q2, but overall full-year incremental margins remain strong. CFO's remarks: Craig Chamberlain. Craig Chamberlain provided further detail on the financial results and guidance. Q1 2026 financials. Net sales, $2.65 billion, up 30% year-over-year, 23% organic, 4% acquisitions, 3% FX. Adjusted operating profit, $551 million, up 64% year-over-year. Adjusted operating margin, 20.8%, up 430 basis points. Drivers included operational leverage, productivity gains, and favorable price/cost, partially offset by tariffs. Adjusted free cash flow, $653 million, up 147% year-over-year, supported by operating profit and working capital efficiency. Net leverage ended the quarter at a very low 0.2x. Q2 2026 guidance. Adjusted diluted EPS, midpoint $1.40, up 47% year-over-year. Net sales, midpoint $3.35 billion, reflecting 27% net sales growth. Adjusted operating profit, midpoint $710 million, representing 45% growth. Adjusted operating margin, midpoint 21.2%, up 270 basis points, with tariffs materially offset. Full year 2026 guidance, recap: net sales, $13.75 billion, midpoint, 34% growth. Adjusted operating profit, $3.2 billion, midpoint, 53% growth. Adjusted operating margin, 23.3%, midpoint, 290 basis points expansion. Adjusted free cash flow, $2.2 billion, midpoint, 17% growth. Price/cost positive, expected for the year, including tariff impacts and countermeasures. Working capital and capital deployment. The unchanged free cash flow guidance accounts for increased inventory to support the ramp-up and prudent forecasting of customer advances. With near-zero leverage, capital deployment priorities remain R&D, capacity investments, and M&A. Key questions and answers summarized. Prefabrication. Vertiv sees prefabrication as crucial for speed to market, mitigating site complexities, and addressing skilled labor shortages. It's not just about assembly but about integrating solutions, like OneCore, for optimized system performance. Capacity and productivity. Manufacturing productivity levels are achieved through prefabrication and factory-based assembly, leading to efficiencies compared to on-site work. Second half growth acceleration. Confidence in accelerating organic growth in H2 2026 stems from increased capacity coming online and a strong backlog and order pipeline, particularly with the projected recovery in EMEA. Services growth. and margins, services growth, both project and lifecycle, is satisfactory. Vertiv is investing in its services organization with strong training and tools. Incremental margins for services are expected to be in the 30% to 35% range, similar to overall company performance. Behind the meter and controls, bring your own power, is a lasting trend, and Vertiv plays a role in microgrids, storage systems, and ensuring consistent power. This complexity presents opportunities for Vertiv across power and thermal solutions. EMEA recovery, strong Q4 and Q1 bookings, pipeline acceleration, and a shortage of AI-capable data centers are driving confidence in EMEA's second-half recovery. Sequential margins, Q1 to Q2. A slight sequential headwind in margins from Q1 to Q2 is expected due to bringing on significant capacity. However, the full-year incremental margin target of 30 to 35% remains on track. Tariffs are expected to be materially offset by the end of Q1. Hyperscale versus enterprise. Hyperscale and cloud remain the primary growth drivers, though enterprise adoption of AI is starting to be seen, with more visible impact expected in 2027. 800-volt architecture. The transition to 800-volt is expected to be significant from 2027 onwards. Vertiv is on track with its portfolio launches for the second half of this year, with broader adoption anticipated in 2027. This transition will also drive broader liquid cooling applications across the IT stack. Pipeline and quoting activity. Pipeline activity and quoting remain strong and dynamic, reflecting broad-based demand across technologies and regions, underpinning the positive outlook for orders. Backlog duration. The backlog is slightly more elongated, providing good visibility into 2027, with customer-requested delivery windows often being 12 to 18 months. Free cash flow and balance sheet. The unchanged free cash flow guide factors in inventory investments for capacity ramp-up and prudent assumptions on customer advances. The strong balance sheet allows for strategic M&A, R&D, and capacity investments. Modular liquid cooling. Vertiv offers both highly optimized custom solutions and standardized modular designs. Solutions like SmartRun integrate power, liquid cooling, and infrastructure for an optimized whitespace solution. Integrated solutions, SmartRun, OneCore, impact on margins. A shift towards integrated solutions is not expected to dilute margins. Product-level margins are anticipated to remain consistent with historical expectations. Convergence of disciplines. The market is gradually shifting towards converged systems, though point solutions will persist. Vertiv is well-positioned to offer both integrated and point solutions, adapting to customer procurement changes. M&A. Vertiv is active in M&A, pursuing both smaller bolt-ons and larger strategic acquisitions that align with their technology and market growth plans. They have the discipline and balance sheet flexibility to execute significant transactions. Closing remarks. Gio Albertazzi. Gio Albertazzi concluded by reiterating his pleasure with the strong Q1 performance and the company's positioning for 2026. He expressed gratitude to the team, customers, suppliers, and partners. He emphasized Vertiv's commitment to investing ahead of the market, maintaining technological leadership, and executing with speed and precision. He expressed strong confidence in Vertiv's trajectory and the significant opportunities ahead. Thank you for your attention.